Guys, we need to talk. What's up, guys, and welcome back to the channel. Today we're going to be talking about something a little different today than the credit cards that we normally talk about. We're going to be talking about the increasing stress on the banking industry. Obviously, as soon as just last week, another bank went under. So we're going to get into it, we're going to talk about it, and then we're going to see how it affects us and our journey through finances. As always, it would be greatly appreciated if you guys hit the thumbs up button, subscribe down below. It helps me a whole lot with the algorithm, it helps me build this channel, it helps me provide more content like this. So with no further ado, let's dive into it. Over the past couple of months, there have been 3 big banking closures all the way back to a couple months ago when Silicon Valley Bank went under. Then after that, Signature Bank went under. And now, just as recently as last Monday, we have First Republic Bank going under, which is currently the biggest bank to go under in the banking crisis in 2023 so far. We're going to dive in and really understand why these banks are not performing to what we expect. So as many people know, with the rising federal interest rates, it's causing a lot of people alarm when they're trying to get loans, everything like that. But also it does contribute to increased interest rates on investments. So this is what happened first with Silicon Valley Bank, and many people already know this, but we're going to dive into really what happened with First Republic Bank, which is the biggest bank to currently go under, with having about $229 billion in assets under its management right before it went under. As I mentioned, there's a multitude of reasons why these banks go under, with the increasing interest rates, the decreased value of equities in the market currently, and increased risk of unsecured deposits that some banks tend to invest in. That is the reason why First Republic Bank went under, is because it had increased uninsured deposits that they let out. So when people came back asking for their money, asking to retrieve their deposits, they didn't have the money to lend them back. The positive thing is that First Republic Bank did get assumed, and all the deposits got assumed by JP Morgan, which is the biggest bank in the United States, which does give us a little bit of more comfort. Yes, it makes one of the big banks even bigger, which isn't completely great, because then they could possibly monopolize the industry. But with a whole bunch of other bigger banks also staying around, it gives us a little comfort because it's making one of the biggest banks even bigger. So it makes the deposits that we put in that bank even more secure. With the closure of First Republic Bank, this marks the largest bank closing since the 2008 crisis, and the closing of Washington Mutual Bank, which was also assumed by JP Morgan back in 2008. So we saw we were able to get out of that banking crisis with the drop of Washington Mutual Bank. And right now, with the drop of First Republic Bank, I still think there's nothing particular to worry about. I think we will get out of this crisis with the astronomical rise in interest rates and people not knowing exactly where to put their equities and stuff like that. I think we will still manage to get out of this crisis and be able to move forward in the future. Now, a lot of you people are sitting there thinking, Pat, what does this mean to me? What does this exactly mean as a consumer? And I can tell you right now, if you are holding more than $250,000 in a bank, you could be at risk. And why is this? This is because what's called the FDIC. What FDIC stands for is Federal Deposit Insurance Corporation. What that means is money that is invested in a bank that participates in the FDIC means that any bank account you open at that bank is insured for $250,000. What that means is if a bank goes under, the federal department will regulate and write a check to you within some time for the amount of money that was standing in your account. So you will not lose that money because it is insured by our federal government. With more explanation on the FDIC written checks, normally they're written a day after the bank is closed for the money that was deposited into your account. Also, you should be getting it 1 to 2 business days after the bank closes. So there shouldn't be any lead time to having to get those checks. So most people shouldn't be in much of a worry if the bank does go under and how long it will take to get your checks. But I would advise that you disperse some funds over a couple different banks to make sure you're safe and sound if anything like this were to happen in the future to yourself. A lot of people are asking me, well, Patrick, is it still okay to trust the banks? Yes, it's perfectly fine as long as your money is FDIC insured in one of those accounts. Your deposits are completely secured, are completely safe, and will be given back to you if a bank were to say go under or some instance such as that. What is also a smart idea is to deposit some funds into a couple different banks just to make sure if something were to happen, checks get delayed, something like that does happen, you have money available to you if you need to pay bills, if you need to do whatever you need to do with that money in the meantime while you're getting your checks. Also, if you have over $250,000 in a single account, you are putting yourself at a little bit of a risk if something were to happen in the future. And is there anything good that comes out of this? There are things that I mentioned earlier when it comes to that JP Morgan Chase did assume all the deposits for First Republic Bank. So this means that it's making a Goliath bank even that much bigger. So it's allowing their deposits to be even more insured, and it's allowing them to make safer decisions with their money, being that the interest rates have spiked and things have adjusted a little bit more in the market. Yes, interest rates are still fluctuating currently, but they're looking to settle down. It doesn't look like JP Morgan Chase has anything to worry about in the near future because since they have an astronomical amount of funds at their disposal, they shouldn't be too worried. So any amount of funds that are being assumed by JP Morgan Chase makes them even more of a comfortable, reliable bank when it comes to the bank giants such as Bank of America, JP Morgan Chase. You could put Capital One in there as well. You could put in Wells Fargo. Those banks are huge. The likeliness of them going under or something bad happening to them is extremely small. So the good thing that comes out of this is that it secures one of our already huge banks from possibly going under or defaulting in the near future or anytime soon. Now, the big question is, what would I do in this instance? And just to preface this, this is not official financial advice. This is just something I would do personally. What I am doing currently with the money that I have is I'm dispersing it into a couple of different banks, having them in a couple of different accounts, just so if something were to happen, I am completely safe. All of my amounts are under $250,000, just so they're all secured by the FDIC. If you have a single bank account that is below $250,000, I think that's perfectly fine. I think that's perfectly safe because it's insured by the FDIC. If you do want to diversify and put it in a couple different bank accounts at different banks, that is perfectly fine too. I'm doing it just to keep my wife and I's finances safe, just in case a bank does go under. We are safe and we have money that we could pull from other banks if we need money immediately and we don't have time to wait for that FDIC check. But otherwise, I think you're perfectly fine. We saw in 2008, we had a few banks that went under, some big banks such as Washington Mutual that went under. We bounced back. We were perfectly fine. I think the same thing's going to happen here. I think in a year or two, we're going to bounce back and we're going to be perfectly fine in the situation we were just a couple years ago. Again, guys, thank you very much for watching the video. If you would, please leave a like and subscribe down at the video. And if you have any questions or anything like that we could talk about, leave them in the comments. I have no problem getting back to you guys. I'll see you guys in the next one.